Good evening, ladies. Welcome back to Compound Interesting. In today's video, I think it's going to be one of the most helpful videos that I've ever created. It might not get a huge amount of views, but I think it can really help improve your investing and trading within crypto. I'm going to be teaching you all the strategies and all the mind shifts that I've learned and all the mistakes that I've made over the last 5 or so years in investing in crypto and investing in the stock market, so you don't have to make the same mistakes and you can go straight to making the good decisions that I'm starting to make now on a more consistent basis, because I think this video can really help you on your investing journey. And these are not just completely generic advice, these are actually quite original, I think, and hopefully will help you in your investing journey. So with all that said, let's get cracking into the first few tips. So I want to just completely skip all that generic advice like buy when others are fearful and sell when others are greedy and DCA over a long time period. I think that's just like completely overstated and everyone knows that, but that doesn't really help anyone. So let's get into some things that are a little bit more specific and can get you above an average investor, because that's what you need to actually make it in crypto. Firstly, this is kind of geared towards the people who are really interested in crypto and who want to outperform Bitcoin and Ethereum and who want to like get those kind of crazy good long-term returns and are quite obsessed with crypto. This isn't for someone who has like a mild interest in crypto, wants to dabble a little bit but doesn't really care that much and potentially has a pretty small portfolio, maybe only has like less than 10 grand to invest. I think if you aren't that interested in crypto, if you don't have a big portfolio right now, I think the better use of your time is trying to increase your salary or increase your earnings outside of crypto rather than trying to make it in crypto. If you're not super interested in crypto, just buy Bitcoin and Ethereum and focus on your job. Just invest in Bitcoin and Ethereum and you'll get a great return over the next coming years with very little effort. But for those people who want to outperform Bitcoin and Ethereum, keep watching. Alright, I think one of the most simple and easy mistakes, one of the easiest mind shifts you can make when you're trading in crypto or buying/investing in crypto is not trying to sell the top and not trying to buy the bottom. So a lot of people, like myself included, this was one of the mistakes I always made, is like I know I'm in massive profits and I'm thinking, okay, it could go higher, I think it's going to go higher, I'll probably sell then. Don't do that, because you're trying to sell a top, and whenever you think, oh, it's probably going to go a little bit higher, I think we're close to the top, sell then. Because if you think, oh, we're probably close to the top, it's probably going to go a little bit higher though, that probably means it is the top. So selling anywhere near the top is great, so don't worry about not getting the exact top. On the other side of the spectrum, if you think the coin is at a good price, buy it. Even if you think it could go lower, just buy into it. You just need to get somewhere in the range of the bottom. You need to buy somewhere in the range of the bottom at a fair price, and you need to sell a little bit higher around the range of the top, and this will eliminate a huge amount of stress, because if you miss the top and it comes back down, you're screwed. And if you miss the bottom and it shoots back up, you're also screwed. Another piece of advice that I've heard, which doesn't really make any sense when you think about it, is buying on big red days or selling on big green days. Like, that makes no sense. So people say like, oh, if Bitcoin drops 10% or more, or Ethereum drops 20% in a day, that's a great time to buy. Not necessarily. Like Bitcoin at the top of the market definitely had, when it was like 65,000, definitely dropped 10% in one day. That was not a good time to buy because it dropped all the way down to 15,000, and vice versa. In like accumulation stages at the bottom of a bear market, Bitcoin's gonna have really strong big up days. That doesn't necessarily mean it's a bad time to buy it if it's gone up 10% the previous day or something like that. From a logical point, that doesn't make any sense. So let's just move on from that. Like the problem with that kind of thinking is that I'm going to wait till there's a big red day, but by the time there is that big red day, you could have missed a huge opportunity to buy in cheaper. So it could have gone up 50% and then dropped 10%. You're like, okay, now is the time to get in. No, that's just not good advice in my opinion. There are much more logical ways to try and time the market if you are going to try and time the market. Right, so the next tip, and this kind of is going to lay the groundwork for the rest of the strategies that I've implemented and which I think are helpful. So a good idea to actually become profitable in crypto and to actually outperform Bitcoin and Ethereum is to pick a niche within crypto. So there are plenty of niches that you could go down in crypto. For example, the niche I kind of go down is profile picture NFT collections, but you could also go down the niche of DeFi. You could go down the niche of art NFTs. You could even go down the route of investing in meme coins and finding meme coins early. Like, all of these different niches can be very profitable, but trying to be an expert in all of them is probably not a good idea. Just try to become an expert in one of these niches that you think will do well. The niche, probably the best niche to pick, is the one that you're most interested in out of those, but there are also plenty of other niches. So once you've chosen your niche, there are different ways to actually research this niche properly. So one of the best ways that I kind of research my niche, like the most simple way, is Twitter and using Twitter lists. So if you don't know, first you have to get on Twitter, and then you can set up these lists where you just have these select few people that you follow that are really smart, gigabrains, like the smartest people within that niche. Like, for example, on my Twitter, you can follow it down below if you want. I'll follow you back. I have a couple of lists, and one for example is called Alpha, and that's just all like the smartest guys in DeFi. So I can hear about coins early, or I can see which coins have the best fundamentals, which ones are earning the most profits, etc, etc. The other way you can research coins properly is using platforms such as Token Terminal, DeFi, heymint.xyz, and I'll do a full breakdown of how to research coins in another video, but there's some websites that you can use to actually research coins a little bit more in depth. Okay, so I think it goes without saying that the majority of your portfolio should be in the assets that you have the highest conviction in, that you've done the most research in, and that you kind of in the back of your mind are probably never going to sell. And for me, those assets are Bitcoin, Tesla, and Ethereum, and my Ethereum that's locked up in NFT. So I'm just constantly DCAing into these assets, and the only strategy that I kind of think about when in regards to these long-term assets is that I don't DCA when things are like, in extreme greed kind of scenarios in the middle of a massive bull market. That's when you should shut down your DCA into those assets. But for 90% of the time, I'll just be DCAing into those assets whenever I have some spare cash. So the rest of your portfolio is for the riskier bets, so like the smaller coins, and for trading. And the way I like to trade is by like spot trading small coins, so trying to buy them low, sell them high, and also NFTs. So do a bit of trading on NFTs, but you can use any strategy you like. Like, a lot of people like to go down the leverage trading route, so leverage trading on Bitcoin and Ethereum. Now, most people lose doing that, but some people make a huge amount of money doing that if you get really good at it. But for me, I'm not good at technical analysis yet. I've tried a bit of leverage trading, and I'm not at that point yet where I can do it well. So the way I trade is I trade on vibes. Now, I think a few of you might be like, what the hell is this guy talking about? Or might have just X'd off the video by now. But I actually do, it is a bit of tongue-in-cheek, but I do like to trade on vibes. And like, some people watching the video are like, this guy's a fucking moron. He has no idea how to trade. And trading on vibes, what the hell is that? And then they go to their little pattern chart of technical analysis, thinking they're a really sophisticated investor when they're analyzing these charts and these squiggly lines, and as if that isn't just astrology for men. But what is trading on vibes? I think this is kind of like it's probably not the best word for it, but just kind of, this is just learn from experience. So what I do is kind of analyze my emotions. So for example, say a coin or say an NFT is pumping, I'll analyze the sentiment on Twitter, and I'll analyze my own personal emotions. So then I'll realize, okay, this is how this pump is making me feel. So I know these are the emotions I'm feeling right now. This is probably what everyone else is feeling in regards to this project, in regards to this coin that is pumping. So recognize that emotion and then detach myself from that emotion. So now I can see this is what the market is feeling right now. This is probably what they're thinking about doing. And then once you've detached your emotion from it, then you can make an objective decision on what to do in regards to that. i.e. buy or sell that project. So once you've detached your emotions, like the emotions is what the newbie trader uses, like the newbie trader, the newbie investor trades or invests on emotions. So you need to obviously detach your emotions from your investments. So once you've detached, so say something is pumping, you're like, okay, I've detached my emotions. I think from my objective analysis, I can see that this thing is going to pump for a little bit longer and this thing is going to continue pumping, but I'm going to get in and get out quickly before everyone else, before like the emotional traders, before they continue being greedy, and yeah, you can sell to them when they're continually buying at a higher price. So it is a bit PvP. So if you want to be a trader, you're going to have to be better than the large majority of people to be able to be profitable in like investing and trading in these kind of quick trading scenarios. The next tip is probably one of the biggest improvements in my trading and investing skills over the last couple of years. So that is to recognize what is your like main emotion, or what is your main mistake that fucks you up. So for me, my main emotion or my main mistake that I continually made was greed. For example, for the last couple of cycles, I've made a good amount of money in the cycle, but then I rode it all the way back down. Similarly, in the most recent cycle, I made a good amount of money, rode it all the way back down. And my biggest mistake is greed. So once things start going up, I actually can't go buy more, or I just don't sell when things are going crazy, because I let my greed emotion take the better of my decision. Now for you, the emotion that might be holding you back, it might be greed as well, or it might be cautiousness. You didn't invest enough, and then when you did get a pump, you sold too early. Other people, the problem they might have is they panic sold when things started to dump. They panic sold at the bottom. So you need to find what is your biggest blunder, or what is your biggest mistake that you're consistently making, and that only comes with time. I realize that I don't panic sell. I'm not too cautious, but I'm way too greedy. That has been holding back my investing and trading profits. So continuing on from that mistake that I always made is that I was always kind of going for a 10x, or I was always trying to get like a double before I sold on these like kind of shorter term trades. But now I'm starting to realize like a 60% gain on an NFT in a few days is an absolutely unbelievably good return on any other metric. But for whatever reason in my head, I was always like, just let it ride, try and get a 10x or something like that. So I've kind of, that was my greed taking over. So I'm kind of trying to nullify that problem, being much more aggressive with my selling, because that is my particular problem. So the lesson from that is be happy with consistent small wins. Even if you make 10% on a trade, if you can make that every once in a while consistently, like once or twice a month, and then similarly make 10% loss less than the 10% gains, then those consistent wins will compound, and yeah, you will do very well over, like, you will increase your trading bag. So be happy with the small wins and take those small wins. That's a personal advice kind of for me, for my kind of problem of being too greedy. So be happy with the smaller wins and compound them. Alright, I really hope you enjoyed the video. I hope you learned something. I hope this gave you value, and I hope you can learn from the mistakes and the emotions that have held me back over the last couple of bull runs. I'm not going to do it again. I'm hopefully going to be a more sophisticated trader, and hopefully you can too. So thank you so much for watching. I really appreciate it. See you later.